Here's a summary of the Novo Nordisk earnings call for Q3 2025, delivered as if for reading aloud. Thank you, and welcome to the Novo Nordisk earnings call for the first 9 months of 2025. Overall financial performance and guidance. Novo Nordisk reported a strong performance for the first 9 months of 2025, with sales growing by 15% at constant exchange rates. Operating profit also saw a significant increase, growing by 10% at constant exchange rates. However, the company has narrowed its full-year guidance. They now expect sales growth of 8% to 11% at constant exchange rates and operating profit growth of 4% to 7%. This adjustment is primarily due to lower expected growth for their GLP-1 treatments in both diabetes and obesity. CEO's strategic vision and key highlights. CEO Mike Doustdar emphasized Novo Nordisk's sharpened focus on its core areas, diabetes and obesity, and related comorbidities. He reiterated the company's long-standing purpose of addressing unmet medical needs, highlighting that over 1 billion people are affected by diabetes or obesity. Key strategic initiatives include focus on core areas, discontinuing non-core assets, and redirecting resources to diabetes and obesity research and development. Patient-centric approach, developing products to help patients live healthier, fuller lives, exploring internal development and strategic partnerships. Addressing comorbidities, pursuing innovation to treat comorbidities associated with diabetes and obesity, citing the Acro acquisition as an example. Company-wide transformation, launching a program to simplify operations, accelerate decision-making, and reallocate capital. This transformation is expected to result in approximately 9,000 job reductions globally, aiming for DKK 8 billion in annual savings by the end of 2026, which will be reinvested into their diabetes and obesity franchises. Serving more patients. The company is now serving around 46 million people living with diabetes and obesity, an increase of 3 million in the last 12 months. Chief Financial Officer's Financial Insights and lowlights. CFO Carsten Knudsen provided details on the financial performance. He noted that while sales grew strongly, the gross margin decreased to 81% compared to 84.6% in the previous year. This decline was attributed to restructuring costs, impairments of production assets, and ongoing capacity expansion costs. Key financial takeaways from the CFO include restructuring costs. DKK 9 billion in restructuring costs were booked in the third quarter, significantly impacting profitability. Gross margin impact. The decrease in gross margin was influenced by DKK 3 billion in one-off restructuring costs and impairments. Operating profit. Operating profit saw a 5% increase in Danish kroner, or 10% at constant exchange rates. However, adjusted for restructuring costs, it grew by 16% in Danish kroner and 21% at constant exchange rates. Guidance revision. The revised guidance reflects lower sales growth expectations for GLP-1 treatments and the costs associated with the Acro and Omros acquisitions. Capital expenditure. Capital expenditure is now expected to be around DKK 60 billion due to adjustments in expansion plans. Free cash flow. Free cash flow is now expected to be DKK 20 million to DKK 30 billion. Key financial metrics for the first 9 months of 2025. Sales growth, plus 15%, constant exchange rates. Operating profit growth, plus 10%, constant exchange rates. Gross margin, 81% net profit growth, plus 4% diluted EPS. DKK 16.99 free cash flow. DKK 63.9 billion future forecasts and outlook. 2025 sales growth, 8% to 11%, constant exchange rates. 2025 operating profit growth, 4% to 7%, constant exchange rates. 2026 outlook. the company anticipates a negative low single-digit impact on global sales growth in 2026 due to the compound patent expiry of semaglutide in certain international markets. The Acro acquisition is expected to lead to increased R&D costs, impacting full-year operating profit growth by around 3 percentage points in 2026. Medicare Part D and IRA. Novo Nordisk has accepted the Inflation Reduction Act maximum fair price (MFP) for Ozempic, Rybelsus, and Wegovy in Medicare Part D for 2027. The estimated impact of this on semaglutide in Medicare Part D, if introduced in 2025, would have been a negative low single-digit impact on global sales growth. Significant risk factors intensifying competition. Competition in both diabetes and obesity markets is intensifying across all regions, impacting growth trends. Compounding and counterfeiting. Compounding of GLP-1s continues to increase in the U.S., impacting legitimate sales. Medicaid coverage changes. Several U.S. states have announced changes to coverage for obesity medicines in 2026 due to budgetary concerns, which will affect Medicaid access to Wegovy. Regulatory uncertainty. While confident, the company acknowledges the need for comprehensive due diligence and adherence to all laws and regulations for acquisitions. Clinical trial risks. The EVOKE trials in early Alzheimer's disease are acknowledged as a high-risk opportunity. Highlight strong sales growth. 15% sales growth in the first 9 months of 2025. Rybelsus approval. Rybelsus now approved in the U.S. and EU with cardiovascular indications. Obesity care growth. Obesity care sales increased by 41%, with Wegovy seeing significant growth. Acquisition of Acro and Omeros. Strategic acquisitions to strengthen the MASH and rare disease pipelines. Metsera acquisition proposal. A proposal to acquire Metsera to further enhance the diabetes and obesity portfolio, signaling continued investment in innovation. Wegovy for MASH. U.S. FDA approval for Wegovy for the treatment of MASH. Internal pipeline progress. Encouraging Phase 3 data for cagrilintide and advancement of internal R&D programs. Expansion of telehealth capabilities. Enhancing commercial efforts to meet evolving market dynamics. Lowlights narrowed guidance. Lowered full-year guidance for sales and operating profit growth. Gross margin decline. A decrease in gross margin due to restructuring costs and production-related expenses. Wegovy FlexTouch setback. A setback with Wegovy FlexTouch in the U.S. market share loss in GLP-1. A noted loss of market share in the combined obesity and diabetes GLP-1 market. Medicaid access concerns. Potential impact of state budgetary concerns on Medicaid coverage for obesity medicines in 2026. Most important statements from management. CEO Mike Doustdar. Our strategy begins with patients at the center of everything we do. We will work tirelessly to develop products that help them live healthier, fuller lives. We are now sharpening our focus. In the past, we spread our resources into areas a bit further away from our core. Therefore, during this last quarter, we have discontinued several non-core assets and redirected resources to areas aligned with our strengths. This program supports our strategy to capture rising global demand and strengthens our competitive position in the increasingly consumer-like obesity market. The unmet need is huge. The volume opportunity longer term in our core area is enormous. We are sharpening our focus on diabetes, obesity, and associated comorbidities in order to address this unmet need. This is our home turf, and it is for us to drive the commercial execution and raise the innovation bar to treat many more patients and treat them better than ever before, and we will not stop until we do that. CFO Karsten Knudsen. Our gross margin decreased to 81% compared to 84.6% in 2024. The decline in gross margin mainly reflects impact of around DKK 3 billion from the one-off restructuring costs, and impairments related to a few production assets. For 2025, sales growth is now expected to be 8% to 11% at constant exchange rates. The new range reflects lower expectations for sales growth of our GLP-1 treatments in diabetes and obesity. Operating profit is now expected to be 4% to 7% at constant exchange rates, negatively impacted by DKK 8 billion in restructuring costs. This concludes the summary of Novo Nordisk's Q3 2025 earnings call. Thank you.